Your phone buzzes at 6:14 in the morning. A bank notification you almost ignore. Then you see the number. $10,342,000. You read it again. You check the account name. It's yours. There's no story yet for how it happened. What you do in the next 60 seconds will shape the next 10 years of your life. Most people think the hard part is spending it. It isn't. It's not spending it yet. The first thing you do isn't buy anything. It's close the app and sit quietly. Financial advisors who work with lottery winners will tell you the same thing, almost word for word. The biggest financial disasters happen in the first 90 days, not because people are foolish, but because they're euphoric, and euphoria makes terrible decisions feel obvious and safe. You don't tell your coworkers. You don't post anything. The moment people know, the calls start. Old friends resurface. Distant cousins remember you exist. Every conversation gets more complicated. You never untell someone once it's out. So the second thing you do is nothing for a week. A rushed decision on day 2 can cost hundreds of thousands. Money quietly disappears fast. Not through some dramatic scam. Through a boat that seemed reasonable at the time. Around day 5, you start making calls. The first one isn't to a broker. It's to a fee-only fiduciary financial advisor, someone legally required to act in your interest. A commission-based advisor earns money when you buy. A fiduciary earns money only from you. Right behind that call comes one to a tax attorney who specializes in sudden wealth. $10 million creates tax questions you've never had to think about before now. Getting this wrong isn't a small mistake. It can cost 6 or 7 figures. You don't put $10 million into one thing. You don't leave it all in savings either. Inflation quietly eats it while you're not looking. Real wealth management looks almost boring. A portion goes into low-cost, diversified index funds, the unglamorous vehicle that built wealth. A portion goes into bonds, the part that keeps you calm when the market has a bad year. A portion sits in liquid cash, enough to cover years without touching the invested part. Then comes the part almost nobody plans for, the debt. Mortgage, credit cards, student loans. This is the moment they disappear, all of it, immediately, no negotiation required at all. Debt with interest working against you is one of the few guaranteed losses in finance. After the debt is gone, you don't quit your job the next morning. That sounds strange. People who walk away from every structure at once often find themselves lost within a year. Not financially, but in a quieter way that's harder to fix with money alone. Some of the calmest stories involve people who kept working, at least for a while. The routine gave their days a shape the money alone couldn't provide on its own. Lifestyle creep is the next danger, and it's a slow one. Nobody buys a mansion on day 1. A nicer car this year. A bigger house next year. None of it feels reckless. 10 million can support a luxurious life, but only if spending stays proportional to what it generates. A reasonable withdrawal rate from a portfolio this size sits around 4% a year. On 10 million invested well, that's $400,000 a year, without touching the principal. That's the number that matters, not the 10 million itself. The 10 million is the machine. People closest to you change too, not always in ways you'd expect them to. Some relationships get easier, freed from the tension money problems used to create. Others get strange, weighed down by expectations nobody says out loud, but everyone feels. The people who navigate this most gracefully set boundaries early, gently but clearly. A year from now, the version of you who handled this carefully looks almost unremarkable. Still working maybe, still living in a home that fits, debt gone. Portfolio quietly compounding. The version of you who didn't handle it carefully looks different. Familiar, actually. It has a name in financial circles, sudden wealth syndrome. Behind it, a simple human pattern. Money that arrives fast, spent fast, chasing a feeling instead of a plan. Gone faster than anyone expected, including the person it happened to in the first place. The number that showed up in your account at 6:14 was never really the story. What you do in the quiet months after, that's the story that actually matters.